Welcome to the latest episode of Beyond Distribution with GTDC podcast. Today's guest is Troy Cogburn, Director of Intelligence for Vation Ventures. Troy shares his thoughts with GTDC CEO Frank Vitagliano on what's driving investments and what the VC community is investing and how IT is at the center of it all. Enjoy the conversation and don't forget to check out our newest study titled Investment Trends in the IT Industry on our website, www.gtdc.org.
Welcome, everybody, to another edition of the GTDC Beyond Distribution podcast. I am really excited today to have Troy Cogburn, who's the Director of Vation Research and Intelligence. It'll be great to talk to you because you recently helped us with a report that we released on the investment trends in IT in the technology space. But before we get there and start talking about that, let's talk a little bit about you, Troy, and your background, and also a little bit about Vation, if you will.
Sure. Thanks, Frank. Thanks for having us on the podcast. I'm really excited about this. And it was really fun working together, putting together that investments in IT trends report. So to give you a little background on me, so you mentioned it, I'm the Director of Vation Intelligence here at Vation Ventures. Really responsible for putting together research on emerging technologies in innovation. And I'll dive into that in just a second. Just to give you a little bit on my background prior to Vation. So I graduated with a computer science degree from Colorado State University, thinking I was going to be a coder. So I'm like, okay, I'm going to go into the coding industry. I'm going to be a software engineer. Well, turns out during one of my internships, I fell in love with IT research. I didn't know how many technologies were out there, fell in love with how fast technology changes and being on kind of the cutting edge. And so I spent roughly 6 years at a reseller, really focused on helping them identify new and emerging partners. And so that was really exciting for me to help kind of build and research and curate these new partners for the reseller and really help drive new revenue streams. And so that's where I met Joe, and then Joe introduced me to Dave, and then eventually they brought me on board over here at Vation Ventures. And so I've been here about 2.5 years now. And while I've been here, there's kind of been two problems that I've been trying to solve. One, research is really lengthy at the moment. And so from my findings in my previous role, a lot of folks don't have time to read a 120-minute report. And so thinking about like CIOs, CTOs, they want just the facts and they want it now. So we're really focused on providing clear and concise research. And then the other thing that we found is a lot of research today doesn't actually include a lot of the startups and emerging technologies and innovation. And so we're really focused on including these new disruptive technologies because they are going to be the emerged or the large enterprise technologies that will be adopted. They're just in the making. And so we're really focused on trying to shed light on where markets are going and who are the new technologies coming to market. So, and that's just one piece of Vation Ventures. I'll give you the quick overview, maybe elevator pitch of Vation Ventures. Really, our goal is to bring the high-tech ecosystem together to help them innovate. And so really, innovation's hard. A lot of end customers are tasked with innovating. They have to decide what that means. And so we're helping the whole high-tech ecosystem innovate from the venture capital to startups to large OEMs to distributors to resellers, all the way down to the end customer. And we do that in 3 ways, which is we have an executive community. And so we've got a community of around 1,200 CXOs, CTOs, CIOs that meet together on a biannual basis all around innovation. And then we also have a more tight-knit roundtable group where we're focused on bringing people together around a very specific problem. And so we get some IT practitioners to rap about the topic. The next thing that we have is consulting. And I'll just real quick, we consult to the end customers about building innovation practices. And then we also consult to OEMs in startups and VCs about go to market. So how do you go to market as innovation? And then the last piece, which is where my group falls under, is our SaaS research platform, which really is intended for folks to really learn about emerging technologies in a really clean and concise way, whether it's from our research or doing their own research. So that's really me and Vation in a nutshell there, Frank.
Yeah, you guys, obviously I'm very familiar, and I know much of our audience is certainly familiar with Vation. Dave's been on, and we've spent some time talking to Dave, and his background very similar to mine, and what you guys are doing is actually very unique from the standpoint of pulling together all the different parts of not only the ecosystem, but also the end user, environment. And that is unusual. Most times when people talk about the channel, they talk about the solution providers, the distributors, the vendors. Every now and then they might talk about, the VCs and what they're doing. But rarely does anybody pull it all together and talk about all of that, plus do it from an end user perspective. So I give you guys a lot of credit for that, and it's really interesting. Well, good. So Troy, we recently released, our latest research paper called the GTDC Investment Trends in the IT Industry. And the idea was to take a look at, not just from a distribution standpoint, but from the entire industry, what's happening with valuations, what are people view as, significantly really good investments that, will endure over the long term, and why, and just kind of a primer in some cases for some of the basics. Who's making the investments? Why are they making them? What do they look like? So talk to us a little bit about that, because you've had, you were very involved in helping us research that and build it out. What did you find as you were kind of going through that with us?
Yeah, so let me just start with from a couple years ago, really when we had the start of the pandemic, and I hate bringing that up, but I have to set it for context. So prior to that, we had a real healthy innovation investment ecosystem. And so the VCs was very healthy, and we kind of went into the pandemic, and I almost saw that as, oh, shoot, are we going to see a slowdown in venture capital funding or just private funding in general? And what actually happened is we saw a significant rise. And I think what happened is we were all forced to innovate over that time. And so we had accelerated digital transformation, which meant the startups needed more capital to run. And so we actually saw 2020 and 2021 were back-to-back record years for the amount of money going in technology. And it was really driven by that digital transformation that these companies were going through, where we started to see record adoption of SaaS and cloud. And I recently just saw a report where traditional data center spending is actually now less than cloud spending. And so we really ramped up the adoption rate there, which ramped up VC funding. And as a result of this kind of fast growth as well, we started to see valuations really start to skyrocket and see an all-time high. I think one of the ones that is always quoted is that when Snowflake went public, they were about 100x their annual revenue, which is absolutely unheard of. And so when they went public, 100x, it's crazy. And so that started to trickle into the private markets, which really was just competitive based off of capital. Who's going to get in on these companies? But when the times were good, the VCs were able to do that. And so kind of leaping into 2022, what we've actually seen is a slowdown in VC funding. And so it's been about 20% each quarter we've slowed down. With that said, we're still above pre-pandemic levels of funding. But the valuations have started to come down. And this is really a result of what's kind of going on in the economy, supply chain shortages, inflation. And so now the VCs are actually having to do a little bit more due diligence than they had before. So 2021, they were able to get terms done within 24 hours. Now they're spending a little bit more time in making sure that these are viable products, because just because of the economic situation right now, folks are trying to extend their run rates with their money. Now, I will say a lot of these startups have built up a lot of capital and have a lot of runway. But for others, you'll actually have seen a lot of layoffs lately, and that's just them trying to extend their run rate because the valuations they've come back down to a little bit more normal, where I think it's like 20, 30x ARR.
Yeah, Troy, it's kind of interesting what you just described, and you very nicely kind of described it and packaged it, is really similar to a lot of what we've seen in the technology space over the last couple of years, right? The emergence of the digital transformation, or the rapid acceleration, I guess is a better way to phrase it, of the digital transformation, starting with, the pandemic, I think has taken a lot of people by surprise, frankly. But it also is a great indicator of why, guys like us have been in this business, and certainly in my case, for as long as I have, because technology will solve a lot of problems. And that's exactly what we're starting to see, right? And so it has been a fun period. So you talked a little bit about some of the technologies, but what technology segments are you seeing that are getting the most attention? Either over the last couple of years and as we go forward, what do you see?
Yeah, I think there's some high level buckets of where it's going. I think I saw a stat that 70% of private investing is going into technology. And then, so that's primarily where I focus my efforts and where I'm monitoring a lot of the deals. But within that technology segment, I kind of break it up into enterprise tech or enterprise software, which is probably the leading area within technology. I think it's roughly about 30% of that. And then it goes into consumer technology. So you can think of a lot of like the social media companies and things like that, where it's just going to be on a Apple App Store, Google App Store, that type of technology. And then it's followed by things like fintech. So financial services has seen a huge disruption over the years. So disruptions to things like banking, lending, payments. So there's a lot of activity there. And then we also see within healthcare as well as kind of the other one. And healthcare is one, because of the pandemic, there's a lot of stuff, but there's still just a lot of innovation happening within healthcare, and actually biopharma as well. And sometimes people separate those two out. But kind of going back to enterprise software, enterprise technology, because that's where my bread and butter is. And this is where I spend most of my time. The way that I've kind of bucketized the enterprise software categories, and some of these will leak into the others, is you've got your enterprise IT software technology, you've got your business unit technology, and then you've got a vertical technology. So technology specific to different industries. And so looking within those enterprise software, I'm seeing a big uptick in primarily two areas, which is data and cybersecurity. And so there's a lot happening there. Data is kind of becoming the foundation of all IT practices, whether you're doing IT ops, whether you're doing business intelligence, whether you're doing cybersecurity. Data is kind of the foundation. And so a lot of folks are still in the process of figuring out, what data do we have? How do we clean it? How do we get it ready for analysis? And so, but the big areas of that are business intelligence and data science. So kind of those two sides of the coin. And then cybersecurity is just kind of, as we've transformed digitally and we've started to move to remote workforce, move to the cloud, we've kind of expanded our attack surface, which has increased our need to secure more areas. And so there's a lot of technologies coming to market to really, how do we solve the remote work security challenge? How do we solve the challenge of securing in the cloud? And then another area that's really interesting is securing applications as well. And so you're starting to see IT operations and responsibilities really start to leak down into the developer. And so there's been a lot of technology to help developers secure their code before they push it to production. Just two tiny bits on the next couple. So business unit software, think of these as marketing, sales, HR tech. Those are kind of some big areas. And then vertical tech is going to line up same with like the financial services, healthcare, retail, supply chain, and logistics. Those are kind of the big ones there. So I know there's a lot, but hopefully I kind of showed you some of the areas that, at least where I'm seeing, really get a lot of traction.
Yeah. So, you mentioned earlier a little bit about the VCs and how they're operating now, and some of the transition that we'll see, sort of post-COVID days. But, I would assume that they're seeing, we mentioned cybersecurity, and obviously that makes a ton of sense for all the reasons you mentioned. I would assume that these folks are seeing just a proliferation of, emerging, vendors in that space.
Mm-hmm.
And so how do you see them, sort of developing their investment plans? And is anything going to change significantly, or do you think it will stay kind of focused in those areas for a little while, at least in the IT area?
Yeah. So I think for the foreseeable future, we're going to see these as common themes in their investment theses. And the reason I say that is because a lot of VC is long-term play as well. And so you think about folks investing in public market, you can see returns really quickly within, let's say, 4 to 5 years. When you're looking at venture capital, a lot of them aren't seeing returns up to like 10 years. And so they're really focused on who are going to be the big players 10 years out. And so for the foreseeable future, I don't think we're solving data problems. I don't think we're solving cybersecurity problems. I think areas that they might start to be more interested in is things like Web3, metaverse, some of these more emerging technologies, maybe even like quantum computing in a sense. And we've already seen some of the folks dabble in that today, but I think there's going to be a little bit of a drawback now that they're doing a little bit more due diligence, and they're going to kind of stick to what they know. And so, and what they do well is IT hardware and software, which most of them are only doing software nowadays. And so cybersecurity, cloud, data, digital experience, those are kind of the areas I see them in the future. I will say that some of the things that have changed over time is just how they're investing. And so a lot of times people would have to move out to Silicon Valley to raise their fund and really assemble their team out in California. Well, we're starting to see it be a lot more distributed. And some of these venture capital firms are saying, hey, we're no longer headquartered in Silicon Valley. We're actually distributed. So you can raise money out of New York or the Midwest and really start to attract entrepreneurs from everywhere and let them live wherever they want and recruit teams from wherever they want. So that's one thing that I think is actually going to increase the amount of opportunities for at least the entrepreneurs.
Yeah, well, that makes a lot of sense. And that is frankly consistent with a lot of what the, hybrid work trend is leading to. Well, I will say one thing relative to the, to the 10-year horizon. So the good news for you is you'll probably be on a podcast 10 years from now talking about it. And the good news for me is I probably won't be with you. Right? When I think of 10-year horizons, that's pretty significant. But when you think back to some of these companies that have done very, very well relatively quickly, but Snowflake is a great example of one. In fact, today's an interesting day, and this thing will end up hitting the wire, probably in the next couple of weeks. But it should be noted today that the overall stock market's down about 2%, and Snowflake is probably the only stock right now that you can find that's actually up.
Really? That's very interesting.
Yeah. But anyway, I digress. So bringing it a little closer to home, from a distribution standpoint, obviously, there's been a lot of significant mergers and activities over the last couple of years. There's been a lot of, companies being acquired by private equity. There's been distributors going public. Talk a little bit about what you're seeing in the distribution landscape over the last couple of years, and where do you think that's going?
Yeah, so I think it's really interesting. One, I'll talk about where M&A in general is at, and then
Yep.
I'll talk about where I think it's kind of important for distribution in the channel. And so we've seen a lot of acquisitions in distribution, and I'll talk about that. But last year was once again a record year for amount of mergers and acquisitions, even through these crazy valuations. And so for me, I don't think that we're going to see as many M&As this year, but they're going to continue to be here. And specific examples of this is cybersecurity industry, incredibly fragmented, so many solutions out there. End customers are confused, partners are confused. I really need like a few go-to partners to go to market with. And so you're going to see a lot of these go-to partners start to acquire platforms. And so look to the large manufacturers to continue to innovate through acquisitions. And so we're going to continue to see that with large firms there. And then for the rest of the industry, I just think it's going to be a similar story as the cybersecurity. But for partners, and this isn't really around acquisitions, but what's super interesting for partners and going to market with VC-backed companies is that you look at where the headcount goes to a lot of these emerging technologies and startups. It's going to engineering and product development. So I think like 80% of their resources is in engineering and product development, which gives a huge opportunity for the channel to really be that go-to-market partner, because you can't be spending 80% of your resource on engineering and expect to have that solid go-to-market. So that's where I think there's a really solid play there. But I do see consolidation all across the board within the distribution. So we saw this with the Tech Data Synnex merger last year. We're also seeing it this year with folks across into Europe with Nubius and another merger going on there. And so we're going to continue to see mergers and acquisitions, I think, within the channel. And even looking at my previous role in where I worked at Trace3, they've acquired, since I've left, probably 4 or 5 smaller resellers as well. And so we're going to continue to see consolidations. One, and for 2 reasons. One, you're going to see it for capabilities. And so think about maybe someone is looking to have a network operations center to help with IT ops services. Maybe that they don't have it. They're going to go out and acquire to get that capability. Or maybe they don't have a whole lot of data. I think data is one of the big gaps within the channel right now. And they're going to probably go out and buy firms to help with the data story, the data science, and the business intelligence. So that's one use case. The other use case is going to be around geography. And so being able to expand to geography. So my old company was primarily in California. So how do you expand to the East Coast? How do you expand international? A lot of that's going to be driven through acquisition. And to be honest, right now, with the way that acquisitions are today, it's a good market to be acquiring. I think it's just going to be up to the vendors whether they accept that valuation that they're at right now.
Well, a lot of it also will be just how do you figure out a way to grow? I mean, it's hard for a lot of companies just to continue with the organic growth. And it will be harder even if we end up in some sort of a recession, or at least some sort of a significant recession.
Mm-hmm.
Whereas when you can figure out a way to acquire and merge companies, you get some economies of scale, but you also get some built-in, growth. The key is obviously both parties are at odds relative to what the valuations need to be, right?
Right.
We're kind of at a sky high period right now. I think that'll start to come down. My sense is with the way the economy's looking here,
Mm-hmm.
that'll start to come down a little bit. And so it may actually accelerate some of that, because I will tell you, I know in my experience, in my network, there's a lot of folks that I've known who've been in the space for 25, 30 years that really aren't interested in going through another, recessionary period.
Yeah,
It's
for
kind of
sure.
like, I've been through it. I've been through, the 90s. I was through the 2008, scenario, went through the COVID scenario. I don't really want to do that anymore. And so I actually think the M&A activity will continue. And the distributor piece is interesting because what I think has happened, and maybe some of it's to your point, because that 80% stat is a really interesting stat relative to where the dollars are going with these new companies, is that I think people have finally woken up to the fact that from a go-to-market standpoint, distribution is more than essential, right?
Yeah, exactly.
And when they start looking at the requirements, because in the day, and Dave and I used to talk about this all the time, distribution was a bank and a warehouse, right? Well,
Yep.
it's far more than a bank and a warehouse today. Still provides the financial support, still provides the basic warehousing stuff, but there's also a ton more that they're doing through their platforms and through their marketplaces, et cetera, that are helping vendors and solution providers get there. And I think people have figured that out. And that's why the valuations are so high, because they're based on their future expectations, right?
Yeah, that's exactly right, Frank. And I think the other side of that is you're talking about how the distributors are evolving. That the vendors are looking for that as well. And so as they've kind of shifted to more of a SaaS type of model, they're looking to the distributors to help them out in this new model as well. And so it's going to be interesting to see how things evolve, but it really provides that the scale that these new technologies really need. And so they're clamoring for it and they need it. And it's just going to be interesting to see how it evolves with things like the marketplaces that you mentioned.
Yeah. Well, the other thing that's happened is when you start looking at what has happened with, private companies or public companies being pulled in private, and then, the reverse happening, obviously, with the TD Synnex merger, where then TD went back to a public company. Ingram went from being owned by, H&A public to being owned by H&A to being owned by Platinum, and, et cetera. What's happened though is there's been a lot of that in North America. And I actually think that over time, we're going to start to see more of it in Europe. And you referenced it a little bit with Nuvius and some others, but I think that'll continue to take place, and that'll be significant from a global standpoint, for sure.
I totally agree. And one of the interesting things about technology in the US and Europe is it seems to be on just a little bit of a shifted timeline. And so what happens in the US in terms of adoption of a technology, I typically start to see like 6 months later in Europe. And so that's just something you got to consider, as well as the technology adoption life cycle is just a little bit different out there. Not that they're not looking at emerging technologies, but oftentimes the technologies that are early here are not ready for the international business out there. And so Europe kind of has to wait and play catch up for these companies to get mature enough to get over to the international play. And the distributors play a huge role in helping them do that.
Yeah, no, for sure. Well, we're kind of getting to the end here, Troy, but I didn't want to leave without mentioning and asking you to comment a little bit on, so the Vation Ventures Summit is coming up here in September.
Yep.
And, you guys, I know we're getting together, I don't know, probably 70 to 100 different, companies at that event. Talk to me a little bit about that and what you guys have traditionally done and what do you expect this year?
Of course. So I think what's really cool about our Vation Forum event is that we bring the entire ecosystem together. And so I think this is one of maybe few conferences that actually do that. So we've got venture capitalists in the room. We've got startups in the room. We've got executives from large manufacturers in the room. We've got distributors, resellers, and we even have CIOs from end customers. And so everyone comes together in really a day of thought leadership, of learning about where technology is going. And so we're kind of learning together. And so we've got things like panels with the CIOs to learn what's going on with the CIOs. We got panels with the venture capitalists to understand where their heads at, where their thesis is, where they placing their bets. We have a startup showcase, And so we have some of our favorite emerging technologies actually give a kind of speed dating 5-minute style pitch. And so really just to give us a teaser and figure out kind of how they're disrupting markets. And so there's a lot of cool things. And like I said, I think the really exciting part is that everyone's there together and it's not just kind of segmented out like some of these other conferences. And really, if you want to know more information about that, you can go check out vationventures.com/the forum. And that's actually on September 15th through the 17th this year.
Yep, that's great. Well, we'll be there. GTDC is sponsored a panel there. And so I'll be talking to a number of our senior leadership from the various distributor companies globally. And we're really looking forward to it. And to your point, that audience is a unique audience because you do catch everybody, a great cross section. So, well, good. Well, Troy, this has been really enjoyable from my standpoint. I know that the listeners are going to like it. So, just from a closing standpoint, anything to add? Any crystal ball that you have relative to what you see coming? Just give us your quick thoughts on that.
Really, just want to thank you, Frank, for having me on. This has been super fun to chat about investments, especially since I'm doing this day in and day out. I don't have a crystal ball, unfortunately, so I can't give you a whole lot in terms of the future. But for anyone that wants to know more, just go ahead and go check out some of our research articles on vationventures.com. So we're posting a lot of times like, what's the future of cloud management? What's the future of data? You can get some teasers there on our website. And if you want to learn more, you can get in touch there as well.
Excellent. Well, that's great. Well, Troy, thanks again. Really appreciate your time and look forward to continuing to work with you guys.